Hello, I'm here at the booth of Lucapa Diamond Company, an Australian company producing diamonds in Angola. And the company has a two-pillar business strategy, and I'm happy and pleased to meet today with CEO Stephen Wetherall. Stephen, good morning and welcome to the last day here at this Mines and Money conference in London. Obviously, it has been a busy week for you. You have had a lot of meetings, but let's start explaining a little bit to our audience and listeners what is the business model of Lucapa Diamond.
Yeah, thanks, Wolfgang. Thank you. Lucapa's business model is twofold. Originally started as an explorer, exploring some of the most prospective ground in Angola. Over the last 8 years, we really have uncovered some fantastic exploration results, so much so that in the last 2 years we've been able to establish a cash-producing alluvial operation, producing some of the most fantastic diamonds in the world. This is injecting cash into the business that allows us to fund what is our core and primary objective of locating the source of these fantastic stones. So that is the focus of the company over the next 2 to 3 years, and we look forward to that challenge.
I mean, we should have to say that the company has recovered the biggest stone ever in Angola, which was a 404 carat, and has been recovered in February. So obviously you have done extremely well with your cash flow during the year, 69 million so far. That's fantastic, I would say. I mean, we have met 1.5 years ago, and it was a company which needed capital, and now you have capital, right? And you can focus on your exploration program. So we have had a press release earlier this week about your exploration mining license. Could you comment on that as well?
Sure. Just going back to the cash generation, you're absolutely correct. You know, when we started the mining strategy, building up our mining capacity last year from 0 to 20,000 bulk cubic meters, cash flows last year $9 million in sales from the project, and then this year we've generated 51 million US dollars, or as you say, 69 million Australian dollars. So the cash flows have been significant and very, very positive. But very pleasingly, we've been informed by the Minister of Geology and Mines in Angola that we've been awarded, the Lulo project has been awarded a new 5-year exploration license, giving us extended tenure on this ground to continue with our strategy to locate the source of these very special stones.
That sounds very good to me, and actually we can see it on the back end. We have here a presentation and a video from the site, so you can see how good and well established is the mine site, which has been organized by the Chief Operating Officer Nick Selby. But I would like to talk with you about the difference between alluvial mining and exploration of kimberlites, and if you can give a little bit of a background that we have a better understanding what is the business model, what is the strategy, and actually how could you further generate shareholder value?
Yeah, absolutely. In terms of alluvial mining versus kimberlite mining, alluvial mining is free dig. It is recovering the diamonds that have been transported away from the original source over millions of years of erosion. That is what we are currently mining. Because we are finding big stones, irregular shaped, jagged edges, stones of compound nature, those are all indicators that the source is proximal. So that gives us the excitement that we are looking for something very big on our ground, given that these stones are also very expensive and very valuable, making the economics of a discovery very, very positive. In terms of the kimberlite exploration, you've got to use a myriad of techniques. You can't just focus on one, you've got to use a whole lot. And in doing so, we have uncovered a number of targets which we have narrowed down to our core high priority targets, and we're working through those now. The strategy over the next 2 years is to expedite that program. Because we have delivered on our alluvial strategy that's generating this cash flow for us, it's now to focus all of our effort and time on locating the source of these magnificent stones. So we have already got one drill in sight. We commissioned a second drill not so long ago, and we've got a third drill that will be arriving in December. So come 2017, we will be drilling those kimberlites and moving through them very quickly to locate the source.
And that's actually the game plan to identify and find the source, which would mean you could have a kimberlite mine if we succeed. And maybe you give us a little bit of a background on Angola and other operators, and what is, especially with your stones, so prolific and
Yeah, look, Angola is just a fantastic country when it comes to diamonds. It is literally littered with diamonds. There are many alluvial producers. There are a few kimberlite producers as well. The largest in Angola is the Alluvial Mine Kotoka, which is rumored, well, not rumored, but actually is the 4th largest diamond mine in the world. It is just 150 kilometers away from where we are. There are a number of other kimberlite mines there as well, very profitable, but none of them producing diamonds such as we are recovering from our concession. So we believe we are unique. If there were other mines in the area producing similar type stones to us, there would be a potential that they could come from that source, but because there are not, we certainly believe that we are searching for something very different and very unique on our property.
And everything sounds good to me. You have a growth story, obviously, and I think, in fact, that you have that alluvial business going very well. You can fund yourself, so that's perfect. But could the shareholders expect also to get a dividend, for example, from the alluvial business? Is that potentially possible?
Yeah, of course it's potentially possible. I think the cash generation that we've generated in 2016 so far is really, it has exceeded our expectations. Whilst we knew it would be cash flow positive, it really has come up at the top end of our expectations. So there is a potential for cash distribution. But as a young company looking to grow, we are also looking at other opportunities, and we will assess all the diamond opportunities that there are. To the extent that we're unable to access any of those opportunities for our shareholders and grow the value in that manner, of course, perhaps we would look to return some of those funds to the shareholders. But let's see what 2017 brings in terms of cash flow generation, in terms of our finds on the kimberlite exploration. Certainly, if we do find what we believe to be an interesting kimberlite, we will also be spending more money delineating it, drilling it, and growing the value in our share price escalation for our shareholders.
I think it's a really good business model, because a lot of investors, they think diamonds, it's a little bit riskier than maybe precious metals, but in fact that you have built that alluvial business and it's doing so well, you have significantly reduced the risk.
I would hope so. I think when the board looked at the strategy 2 years ago and decided that we do need to build a base for this company, kimberlite exploration on its own can be very risky. If you don't bring results back to the market and you look to raise funds to try and continue with your program, those funds may or may not be there, and if they are there, they might be there at a price that you don't like. So to adapt our strategy to build a cash generative base, a strong base that doesn't require us to go back to the market to continue asking for money, I think certainly has de-risked the project and our company significantly.
I mean, Stephen, obviously you are an expert in the diamond business, and you spend, I think, the whole life. And can you give us a little bit of background of yourself?
Sure. I think I'm very fortunate. Certainly as a qualified chartered accountant coming through Deloitte. When I left the profession, I joined De Beers, which is the very famous diamond university. I left De Beers in 2006 and joined another diamond company called Gem Diamonds, where I learned a lot about the diamond landscape, certainly looking at every single project that there was around the space at the time, what is good, what is bad, the resource and so forth. But I also spent a long time understanding what happens to diamonds beyond the rough mine gate. Who are the users, the diamantaires, retail, consumer and so forth. And I think because of that, I was fortunate enough to actually learn quite a lot on the entire pipeline, diamond pipeline. So I do know a lot, but I've been fortunate to be in some of the good companies in my time in the diamond space.
So obviously you are very well connected with the, let's call it the bigger guys. So I'm pretty sure they will follow you very closely and see what you can deliver. But I think next year, 2017, will be very excited for the investors or shareholders of Lucapa Diamond, because you are going out and drill a lot and hope to find a source, and that could be another new mine in Angola. Thanks a lot, Stephen, for the interview. All the best.